Hola, ¿qué tal amigos y amigas? Bienvenidos a un video especial, y es que esta es una entrevista que se hizo con el economista Peter Schiff. En esta entrevista, quien no conozca a Peter Schiff nos da su opinión acerca de distintos temas. Pero ¿quién es él? Él es un economista, es un trader de bolsa, ahora sí como un lobo de Wall Street, que le ha venido atinando a todas las crisis que ha habido en Estados Unidos. En el 2007 escribió un libro de cómo ganarle, cómo aprovechar la gran caída que estaba a punto de suceder. Esto mientras en aquel entonces el presidente de la Reserva Federal decía que ni de broma iba a haber una recesión en los Estados Unidos. Un año o 2 años después de que dijo estas palabras, se colapsó el sistema de la vivienda estadounidense y las personas que escucharon a Peter Schiff se hicieron mucho dinero. Bueno, pues ahora nos va a dar su opinión de distintos temas, del nearshoring, del patrón oro, Rusia, China, de qué va a pasar con el dólar, qué va a pasar con las tasas. Así que vean la entrevista, disfrútenla, está en inglés con subtítulos. Y sin más, pues ahí los veo. También suscríbanse a este canal, ya sea el Chapucero USA, Chapucero Finanzas y también en Bitvenue, para que vean más contenido así. Yo los veo después, cuídense mucho. Bye. Hello everyone, my name is Aaron Diaz. I'm here interviewing Peter Schiff. Peter Schiff is one of the biggest economists that the US has to offer to the world. He actually was able to predict when in 2008 we were about to have a recession. So here is with us today, and I want to start to saying welcome Peter to the show. Welcome to El Chapucero and Bitvenue. How are you doing today?
I'm doing well, but most of the mainstream economists we have here would take exception to that. They probably look at me as some kind of a quack, even though I did manage to predict the 2008 financial crisis and pretty much everything that's happened since on a global macro level. But they overlook that because I approach everything from the perspective of Austrian economics, and they're pretty much all Keynesians, and so they really don't understand real economics. I am a astronomer, and they're all astrologers.
Exactly. That's why I follow you. That's why I look up to you. I don't look up to them. That's why I'm saying you are one of the best. And I actually respect you and I admire you. I want to say that one of the reasons why I started to study economics is because of you. So I want to thank you personally. And now look at me. I'm now having a channel teaching about economics, Austrian economics.
Yeah, that's great.
All right, so let's start the interview with something soft. What are your thoughts about Jerome Powell's speech from yesterday? Do you think are they going to start lowering their interest? Are we going to see a recession? Just give me your first thoughts when you were listening to his speech.
Well, I mean, first of all, it's hard to say whether Jerome Powell is lying or if he's just that ignorant when it comes to his understanding of inflation. I'm not sure which is worse. Probably ignorant is worse than being a liar. But, he talks about inflation as if it's a byproduct of expectations, or if it's a function of supply chains or a wage price spiral. He doesn't seem to understand that inflation is actually caused by government. And it's the spending of money and the printing of money. When governments spend money that they don't collect in taxes and they rely on a central bank to print money, that's inflation. Inflation is the expansion of the money supply, and the mechanism that money supply is expanded is through the central bank. So it's Powell and his buddies on the FOMC working in cooperation with the Congress of the United States. That's where the inflation is coming from. It doesn't have any other source. And what Powell has done so far with interest rates has really done nothing to put the inflation genie back in the bottle. He doesn't understand that. He sees that the numbers have come down a bit. And yes, I mean, that was bound to happen. We had a correction in oil and other commodity prices, and so we've had a bit of a pullback. But this is transitory. What they initially saw, the big increase in inflation, that they thought was transitory, and they were wrong. That was permanent. Now they're thinking the disinflation they're seeing now is permanent. No, this is transitory. By the end of the year, maybe even by the middle of the year, we're going to see higher, not lower inflation rates, because the government is still spending, deficits are still record highs and growing, even though the Fed has raised rates, it hasn't altered consumer behavior. They're not saving more; they're saving less. They're depleting their savings. Credit card debt is at an all-time record high, so everybody is spending, and that is fueling the rise in prices. But people aren't productively employed; they're just buying imports. Our trade deficits are soaring, and one of the reasons that the inflation numbers improved was because we had a big rally in the dollar. Well, that rally is in the process of unwinding. It had a big drop in the fourth quarter of last year, which is continuing in Q1 of this year. And as the dollar continues to weaken throughout the year, which is my forecast, that will put upward pressure on commodity prices. I think we're going to see new highs in many commodities. And this is also going to put a lot of upward pressure on the CPI in the US.
Now, that brings me up to two questions. Are we going to see a rebound on oil? And do you see any similarities between this inflation cycle and the one that happened in 1963, where it actually peaked and then went down a little and then went all the way up almost to 20% in 1983? Do you see any kind of similarities to this?
Yeah, well, I think 81 was the peak last time when we got inflation about 13.5%. It was interest rates that peaked at 20%. Official inflation never got quite that high. But I think this inflation is going to be much worse. In fact, I think it already is worse. But what's more important is we're not going to do anything about it because we can no longer survive the medicine, because the medicine that we needed to take in 1980 was 20% interest rates, which was 7%, 7.5% above the inflation rate. We've never even got interest rates to reach the inflation rate, let alone exceed it. And back in 1980, we still were a creditor nation. The world owed us. We didn't owe the world. Now we're the world's biggest debtor. We were still running trade surpluses in 1980. Now we have huge deficits. So, we have just a massive leveraged bubble economy now that we didn't have back then. And so the economy was able to survive those high interest rates. We can't even survive the rates that we've got now. We're barely, not even at 5% in the Fed funds. And this is unsustainable. If the Fed doesn't start cutting rates soon, we're going to have a financial crisis because we have too much debt, especially the U.S. government. We have a $31 trillion national debt. We can't finance that at 5%. So if the Fed keeps interest rates at 5% for a few years, the government is broke. The government won't be able to afford to pay the interest after all that short-term debt has to roll over at 5% when they've got it financed now at 25 basis points.
Yeah.
When they try to refinance it, you're going to be looking at more than $1 trillion a year in just interest on the national debt. And there's just no way that that's payable.
Do you see Jerome Powell lowering interest rates by the end of the year then?
Well, I think he's going to want to, because the economy is going to be much weaker than he thinks. We may even again have a financial crisis. But I think what's more likely than cutting rates is a return to quantitative easing. I think that's pretty much baked in the cake, because he's going to want to stop long-term interest rates from soaring, which I believe they will do absent the Fed intervening. And so I think we're definitely going to get more quantitative easing. Right now, the Fed is doing quantitative tightening.
Yeah.
But it's hard to say whether or not we're going to get the rate cuts. We very well might get them. And will the Fed get all the way back down to zero? I think it'll be difficult to do that. If they do, the dollar is toast, and inflation could end up being hyperinflation.
Okay. Now, I'm going to get a little bit... I want to ask you, are you familiar with the Great Reset that they talk about in 2020? Do you think it has anything to do with what we're seeing today? Are they going to try to reset the economy?
Well, I don't think they could reset it by design, but certainly I think a lot of governments want to inflate away their debt because there's no realistic way of repaying it, and in many cases, even servicing it. And I also think a lot of countries would like to have a reset when it comes to the monetary system, where the dollar is the reserve currency. It's creating tremendous problems throughout the world. Now, America benefits from this privilege, but at the expense of a lot of other nations that have to bear the cost. So other nations would like to see a reset. Obviously, the U.S. does not, because the U.S. derives a huge benefit from this, and we, abuse that benefit. But ultimately, we're going to lose it as a result of that abuse, and then it's going to impose some harsh economic consequences on the United States and the standard of living of Americans.
Are we gonna see it back to the gold standard?
Yeah, well, a gold standard is the best monetary system we've ever come up with. Legally, it's what's constitutional in the United States. I believe the Federal Reserve notes that are circulating today are unconstitutional. They're not issued by the U.S. government. They're issued by a private bank, which was supposedly making them constitutional. But I don't think that it really passed the test. If we had a more honest Supreme Court that understood and enforced the Constitution, we would still be on the gold standard that the framers, embedded in the Constitution.
Yes.
The legal tender in the United States is gold and silver. But even though we're not following the framers' advice, I think we will eventually, because I think that once we have a currency crisis, the only way out will be a return to gold. Other countries, you're in Mexico, you look further to the south, Argentina, the currency blows up, and the people turn to the US dollar
Yes.
as an alternative. But if the dollar blows up, where do Americans go? I mean, are they going to just try to use the euro or the yen? I mean,
it's already
it
falling.
doesn't make any sense
Yes.
that those currencies would be looked at as a big improvement over the dollar. So I think the only thing that really represents a step up would be gold. And I think that would work in Europe, it would work in Japan. All these major economies have created too much money, have kept interest rates too low. And I think inflation is going to be a problem that's going to affect the entire world, not just the United States. And politicians just are not willing to do what's necessary to, stop the inflation, because it creates a crisis immediately, as opposed to inflation, which creates it slowly and then rapidly, but in the future. And politicians are very good at blaming inflation on other people. So they generally choose that over, a default or cuts in government spending or things that would immediately impose adverse consequences on people, but the people would blame them. If it's inflation, they could always blame, greedy corporations.
Just like they're doing right now. Yeah.
They can blame capitalism, whatever. They can blame everybody but themselves. But I think at the end of the day, the only way to really reset the monetary system would be to return to a gold standard, and meaning that currencies would be backed by real money. That's what gold is. It's real money. Paper currency is a substitute for real money. You can have legitimate currency that's backed by real money, or you can have fiat currency, which is what we have now, which is paper backed by nothing. But fiat systems don't work, and they eventually implode. The only question is, how long does it take?
That sounds like a Ponzi scheme. Now,
They're monetary Ponzi. Exactly.
Exactly. And that brings me to the next question. I don't know if you're following China. China and Russia are doing two things. First of all, China has been buying tons of gold. They reported they bought 100 tons of gold since December 21st, if I remember correctly. And then, on the other hand, we have Russia with SUR saying that they are going to create a token, kind of like a currency, cryptocurrency, but it's going to be backed by gold. That way, they're going to be able to evade U.S. sanctions. Do you see that Do you see them actually moving into the gold standard, and this kind of like having a domino effect on other nations, and then maybe we're going to see a future where gold is going to come back as in a currency, digital currency form?
Yeah, I do believe that ultimately the Chinese and probably the Russians as well will be back on a monetary system that's based on gold, anchored in gold. And so you'll have a gold-backed yuan or a gold-backed ruble, and the currencies will be fixed as specific weights of gold, which is how the dollar, once was. I think this is coming. I think this is inevitable. And then they can also have digital currencies. So their currencies could exist in paper form and in digital form, but both would be backed by gold. And that's what would create the confidence in the monetary unit as a store of value and as a vehicle for deferred payments, and you can negotiate contracts in it and bonds in it, because you know that it's not going to be debased if you trust the government not to renege on its commitments. And of course, that's a big if, because governments have defaulted, like the United States. The United States promised the world that its notes were redeemable in gold, and then defaulted and gave its creditors nothing. And the United States got away with it. So we'll see. But I do believe there's also going to be a lot of private companies that will issue their own digital currencies backed by gold. So you'll have choices. You can have a government currency. You can have a privately issued currency. But as long as they're backed by gold, then they'll work. They'll work as not only a medium of exchange and a unit of account, but as a store of value.
What are your thoughts on CBDCs?
Well, certainly. I mean, I would just hope that central banks don't end up eliminating the paper alternative and force everybody to use a digital currency, because I think that's a very oppressive monetary system, because it gives the government way too much power, because the government gains much too much knowledge about each and every citizen and every transaction they make. And you don't want governments to have that much knowledge and power, because governments are ripe with corruption and abuse, and the more power you give them, the more likely they are to abuse it. So I think people have to be vigilant and make sure that governments don't know every single thing we do. And it's not because we're a bunch of criminals. No, it's because the government may be run by a bunch of criminals. It's honest people that have to be worried when governments can spy on you and know everything that you do. Because, let's say the government is very corrupt, and you're trying to organize a resistance, or you're trying to do something to oppose that corruption. Well, if they know every transaction you make, they can see what you're doing, and then they can send the Secret Service to your house to get rid of you. So we don't want to make it so easy for the government to know everything we do. And the government will say, oh well, we need to catch the drug dealers and the money launderers. You know what? Yeah, we need to catch them, but it's not worth giving up all of our individual liberty in order to do that. The cost is not worth the benefit. If a few drug dealers get away, that's better than losing all of our liberty. And by the way, we should just repeal most of these drug laws, and then we won't have to worry about illegal drug dealers, because they'll go away.
Okay, let's see what's next. Let's talk about South America. Right now, Brazil and Argentina, they are considering creating a new currency called SUR, S-U-R. They are inviting Mexico, and they are inviting pretty much all Latin American countries. What are your thoughts on that? Do you think that's going to have any success? Well, you already told me.
Argentina isn't exactly the poster child for sound money.
Yeah.
They're one of the worst offenders down there in South America, with massive inflation. So I don't know why anybody would want to hitch their wagon to that. So I would stay away. But obviously, what would make sense is if Latin American countries can coalesce around gold, and have gold as a common money, and have a one currency backed by gold. That would be something that would be a step in the right direction. But to just create some new kind of fiat currency that's backed by the other fiat currencies, and trust that somehow it's going to work better, it would mean that currency would end up getting abused. And I think the countries that were more fiscally prudent would end up being taken advantage of by the countries that are less.
Right.
And it would be more of a beggar thy neighbor situation, where there would be lots of moral hazard. Like, look at the moral hazard you've got in Europe right now with the common currency there. So no, I think that, again, gold works as a international money, because everybody can price goods and services in gold no matter what country they're in.
Okay, that's great. All right, I think two last questions, and then that's gonna be it. Do you see any black swans in the horizon for this year or the next year?
Well, you know, black swans are things that kind of come out of the blue that you don't really expect, right? And they're very rare, and nobody can see it coming, and then it happens. So I don't see any black swans. I mean, all the swans I see are pretty white. I mean, they're pretty common. It's just that most people don't know what they look like. That's why when they talk about, oh, there was a black swan in 2008. No, there wasn't. Because everything that happened in 2008, I predicted years before it happened, and I laid it out exactly the way it went down. So it was only black swans to people who are colorblind and just don't know what's happening. They're surprised by what should be obvious. So yes, things are going to happen that are going to surprise a lot of people. The same people that were surprised by the 2008 financial crisis are going to be surprised by the crisis that's coming, which ultimately is going to be a sovereign debt crisis and a US dollar crisis. But it's not a black swan. I mean, this is exactly what you would expect would happen as a consequences of all the policy mistakes that they're making. It's just that the people making these mistakes don't know they're making mistakes. And so they're not going to connect the dots between what they're doing and the problem that they're going to be confronted with. They're not going to realize that they caused it.
All right. So how many white swans do you see? You see the U.S. debt collapsing. You see the U.S. dollar collapsing. Do you see Taiwan being as a white
Yeah,
swan?
I mean, there's a whole
Russia.
flock of them out there, I guess. But the bottom line is that the Federal Reserve has created a U.S. economy that is completely dependent on near 0% interest rates because we have such an enormous amount of debt. And the economy is dependent on the continuous running of trade deficits. And the trade deficits get bigger and bigger every year as the U.S. grows more and more dependent on the rest of the world. And so we need this growing demand for dollars for this Ponzi of an economy to continue, because our trading partners have to be content with collecting dollars, right? They have to be willing to divert real resources, land, labor, and capital, to producing goods for Americans to consume. And in exchange for those goods, get nothing in return but a piece of paper that they have to hold on to and collect more pieces of paper, right? They have to build this huge pile of dollars and have the pile get bigger and bigger and bigger. And we have to go deeper and deeper into debt. But eventually the whole thing has to implode. Just like, all Ponzi schemes collapse, they can't grow indefinitely. Something is going to happen. But the longer they go on, the more disruptive it is when it falls apart, the more people who get impacted. And this has already been going on for generations now. So it's going to send shockwaves throughout the world when the whole thing collapses. But, people think that inflation is over. It's not. It's just getting started. It's the consequence of, 10 years of inflation creation. Quantitative easing is inflation. All these central banks that were doing QE, they were creating inflation. That's all QE is. It's a euphemism for inflation. And the whole time, a lot of these central bankers were saying the problem is we don't have enough inflation. Prices are rising too slowly. We need more inflation. Well, now we've got a lot more inflation, and there's a lag. And so we're going to begin to see, or we've already begun to see, but we will continue to see the effects of all this inflation for years to come as prices go up. And the investors around the world still don't get this. They think maybe this period of higher inflation is temporary and it's going to go back to the way it was so that interest rates can go back down near zero. That's not going to happen. And this phony economy that was built addicted to that system is going to implode. And that's going to be the crisis because a lot of companies go bankrupt, a lot of debts go into default, a lot of people lose money. And if the Federal Reserve or other central banks try to bail everybody out again, like they did in 2008 or like they did in 2020 with COVID, then they're going to destroy the dollar, destroy the currencies, and you have hyperinflation.
Do you think that's why Saudi Arabia just decided to start selling oil. One of the main reasons of demand of US dollars in the world, they decided to open up their sales in other kind of currencies just to
Yeah.
protect them.
I mean, if you go back and look at the origin of the petrodollar, that really happened under Richard Nixon, because when they took away the dollar's gold backing, they needed to have some other reason to hold dollars, and they got it with oil. Okay, you couldn't get gold for your dollars, but you could buy oil, you know. And it wasn't a fixed amount, but they at least accepted the currency as payment for oil. So if you wanted oil, which everybody needs oil, they don't just want it, they need it, you needed dollars to pay for it. So that created a demand for dollars. But of course, also back in 1980, America still manufactured a lot more stuff.
Yeah.
But a lot of the stuff that we used to make, we now import. So if people need electronic equipment, they don't have to get dollars, because they need euros, they need yen. That's where all that stuff is made. But at one point, all the stuff like that was made in America. And if you wanted a camera, you needed dollars. Well, we don't make cameras anymore. You want a camera, you need yen or you need euros or something like that. There's a lot of things that we used to make that we don't make anymore. And so the demand for dollars is going down, but people still use dollars to buy oil. But to the extent that Saudi Arabia and other countries move away from that relationship, then yes, that's going to be very dangerous to the dollar. I think it's good news for the rest of the world, because America abuses the privilege of issuing the reserve currency, which is one of the reasons why it's very foolish of America to weaponize the dollar and to sanction people when they don't like what they've done, because that highlights the risks of the system to our trading partners, particularly trading partners that we don't like, or that are not publicly thought of in a good way. Like the Chinese are considered an enemy of the United States. Most people, they don't look, even though China is our biggest supplier of goods and our biggest lender. I mean, although it may be Japan right now, sometimes it's Japan, sometimes it's China, but China certainly supplies America with more merchandise than any other country. Somehow, how is that our enemy when they're the ones that are giving us the most stuff? But it's China's in a predicament because they're holding trillions of our dollars and our treasuries, and that leaves them vulnerable to sanctions. And so it's another reason to get away from the dollar. They saw what we did to Russia, and a lot of people saw what we did to Russia, and they're like, whoa, I don't want that happening to me. And so, they're trying to divest.
In that sense, I think this is the last question, but you keep bringing up really good answers. In Mexico right now, there's a phenomenon called nearshoring. It's pretty much having companies outside of Mexico from Europe, Asia, and the U.S. moving to Mexico and using the NAFTA to make things in Mexico and send them to the U.S. What are your thoughts on that? Should Mexico embrace that kind of market, embrace that kind of economy, if the if the U.S. dollar is going to fall? Do you think?
Yeah, well, I think America, when the dollar collapses, then Americans are not going to be able to afford to buy as many products, and so exports to America will go down, right? But as the dollar goes down, other currencies go up, right? That's because the dollar is going down in relation to another currency, and so those are the markets that Mexico would need to look towards. Other emerging markets, other currencies are going to go up, and so consumers in those countries will now have the purchasing power that Americans lost. So there'll be trading opportunities. It just may be different players that you're trading with. But the benefit is those countries are also making stuff that you want, because trade should be balanced. You shouldn't just have a huge surplus with another country. Trade should balance, because the whole purpose of an export is to import, right? It's comparative advantage. If I grow apples, but my land isn't very good for oranges, and there's another farmer who grows oranges but can't really grow apples, it doesn't make sense for both of us to grow apples and oranges because we won't have as much. But if I just grow the apples and that other farmer just grows the oranges, and then we trade, we each end up with more fruit.
Right.
But it would make no sense for me to grow my apples and just give them to the other farmer and get no oranges. I mean, what I got nothing to show for the extra work. So you're supposed to be exporting to afford to import. And so Mexico would be better off trading with countries that can actually afford to pay for their products than a country like America that's all IOUs. We take other people's products, but we just give them a piece of paper. We don't actually give them products that they can use in exchange. But all of this is going to change when the dollar's reserve status is lost. But what I'm trying to help people do, and what I would suggest for your audience is, you need to have an investment portfolio today that reflects not the way the world looks now or looked over the past couple of decades, but how it's going to look. You have to realize that major changes are coming, and we're already in the early stages of this transformation. And as this happens, fortunes are going to be lost and fortunes are going to be made. And you need to be on the right side of this transition. And I think that personally, I have positioned my portfolio and the portfolio of my clients to come out of this financially, at least, as winners, right? And people around the world have to make the same types of investments. It's not just Americans. I've got clients all around the world, including in South America. And a lot of South Americans too have been overly invested in the United States, and they have to recognize that that's problematic, that pretty soon America is going to have a lot of the same problems that Argentina has. And so if you're in Argentina and you're investing in the US, you could be jumping from the frying pan into the fire. So you really need to look further away around the world. But you also need to evaluate companies based on traditional methods of valuation, and you have to understand how the changing role of the dollar and exchange rates is going to affect other prices and other markets. And you have to make sure you have companies that are going to have customers that are going to be wealthier, not poorer. So you have the right revenue sources, that you're invested in the right regions, in the right sectors. If you look at a couple of my mutual funds, which are based on some of the investment strategies that we have for separately managed accounts. So if you're living outside the United States, you can't buy my mutual funds, but you can invest with me and I manage your money. But if you look at these funds that are based on my strategy, a U.S. News and World Report just released a study last week, and they went over 350 about large cap international value funds. And they took the top 60 and they ranked them in order. And I have two funds that are in that category. And my funds rank number 1 and number 3.
What are the names of your funds in case
It's
someone...
the Euro-Pacific
Yeah.
Dividend Payers Fund and the Euro-Pacific Value Fund.
Okay.
Now, if you're outside the United States, you can't buy the funds, but you can have an account with my company, Euro-Pacific Asset Management, and we have separately managed portfolios that these funds are based off of. So they generally have about the same return. And the reason that my funds are performing so well relative to other funds, and this is over 1 year, 3 year, and 5 year. I mean, we're cleaning up versus the competition, is because we're investing in the right sectors. We're avoiding the wrong sectors, and we're stock picking. We're picking the right companies. But I think that this sector selection and stock picking is going to be even more important when the dollar really starts to fall, because we've been outperforming in a strong dollar environment, but my strategy will shine brightest in a weak dollar environment. And that's the environment that we're headed for. So, I would encourage your listeners to get in touch with the representatives at Euro Pacific Asset Management. You can get the phone number up on the website that's above my shoulder and talk to our representatives about setting up an account for us to manage for you in global equities. We're investing in developed markets and emerging markets, commodities, gold-oriented investments, the things that are going to do well in stagflation, weak US dollar, and environments where the growth is going to be predominantly outside the United States, particularly in the emerging markets.
Okay, sounds good. That's a website. It's called europact.com for everyone to go and take a look at it. All right, Peter, well, is there anywhere people can follow your advices, your insights?
Yeah, well, also, I am on social media. I'm on YouTube as well, and people can go to my YouTube channel, Peter Schiff or Schiff Report. My podcast I put it up on YouTube usually a couple times a week. You can also see it at schiffradio.com. Follow me on social media. The place I'm the most active is Twitter. I've got over 900,000 followers now, so hopefully we'll hit 1 million this year. But I'm pretty active there. So if you want to get my take on current events, you should follow me on Twitter. But I'm also on Instagram, Facebook, TikTok. I mean, I put out content on social media. And so you can follow me, everywhere I'm out there. I'm on all the main platforms.
Awesome. Well, thank you so much, Peter, for being here with us tonight. I think you gave us a lot of insight on everything you see, and your mind is bright. So I want to thank you again, and thank you to everyone who listened to us, listened to the whole interview. I appreciate you, and we'll see you around. All right?
All right, take care. Thanks for having me on.
Bye-bye.